So this is weekly commentary 39. So continuing from the last weekly commentary, right? So we were discussing the idea of redelivered rebalance within this candle, right? Because this candle overshot the entire range and then we moved back through it. So there was double, you know, buying within this range. So we traded back down into it and we seen that we have found some rejection inside of that range at the close of the redelivered rebalance. So if we go down to the weekly time frame, right? Now let's understand what's going on here along the DXY and the euro. We are in a deep discount in the DXY. Now, on the economic calendar, there is a lot of FOMC news. Right now, FOMC, when you hear FOMC, what market should your mind shift towards? The bonds, right? So let's look at the bonds, right? Now we had this sweep on this previous week's low, and we're coming back up into the range. Now, if you look onto the daily chart of it, you can see that the candles are printing higher, and it's probably likely to come and trade within this range here. So I'm expecting the US 10-year to move up higher, along with the news of FOMC for the USD, right? Now, if you go to, I believe it's a 4-hour chart, you can see that we're offering, perhaps a market structure shift on the 4-hour US 10-year. So we went from a low, high, low, low. Now we're getting above here. If I can see a move higher, above here specifically, right? Yes, above here, but I'd want to see this, these relatively flat candles get traded above. I want to see displacement above that. I want to see the move here, the candle that moves above it. I want to see it create a fair value gap or a level of imbalance, avoid, etc. That's going to show me the intention of the market structure shift. Put this in your notes. When a market structure shift in line with our bias occurs, we want to see displacement in with the market structure shift. Preferably, you see when you go high, low, and then the higher high here, when we break that high, I want to see displacement breaking that high. That shows intention to seek buy side liquidity. If we're just edging higher, right, it's not as, it doesn't make me as confident in the change of, the delivery of price. I want to see that, that footprint of smart money. I want to see, the intention of the algorithm repricing shown by the creation of a fair value gap when we do the market structure shift. So now bear that in mind, the 4-hour. Now, market structure shift occurs, you want to see the move at least into this order block here. That's the first thing that you're going to line out. If we do reject off of that, you could go down, retrace, reaccumulate, and then work your way above, buy side liquidity pools being the highs here and then ultimately the highs here, right? And what would that offset for the DXY is, the same move to seek buy side liquidity above here and work our way up to the top of the range. Now, for this week, we were consolidating quite a bit, right? Now, before we actually talk about the consolidation, let's match the weekly with the Euro USD, and then let's look at the COT data to further understand what's going on with the candles. So we see, right, we swept the previous week's low, we went into this rejection block inside of this entire monthly redelivered rebalance. Now, the weekly candle, right, let's see if this is going to be the swing point. We've touched many times on the 3-bar formation for a swing low and a swing high. Now, if we can see the next candle push away higher, which is what I'm assuming, I want to see us move up higher and fill in this candle's inefficiency, this imbalance created with this strong down displacement here, then we'll have a swing point created. And then it will be interesting in seeing what the buy side targets would be. The buy side targets I'd have if the next candle is pushing up higher is this candle's high, and then ultimately work up inside of this range again. Now, if you look at the euro, right, the euro, we reacted off of this fair value gap from this candle's high to this candle's low, and it was coupled with this up candle, which is the order block. And this was what we pointed towards in the weekly commentary. Now, we rejected off of that. We swept the previous week's high and we rejected off of that. Now, for your profiling, because you're so close to this, this premium PD array, forget this candle printed and that this was a week ago. This was the current candle. Look at your bias. What are you looking for? Okay, we're moving back into the premium and we've broken highs. Remember the COT data was net short on the euro. We're going to look at the COT data again. It's even more net short now, but listen to this. Early on in the week, this is how you frame your midweek reversals. Are you local to any premium PD array or run on a high that could occur close in the week, early on in the week? And it's only possible early on in the week if you're local to it. What do I mean by local? If you're close by to it. For example, this fair value gap, we're close. When we're here with this candle, we can move up into this fair value gap. This is, a logical place to frame the reversal, right? We trade up into it, and when you see that rejection, right, you can find many short positions, many short opportunities off of this weekly PD array, given that it's a logical place for the high of the week to be intact. On a 1 hour chart, we had displacement away from here. Right, if you go to the 1 hour, right, this was the move higher, and we called this, right? We had that weekly, that weekly level marked out, and we ran it with the news. The news event was the reason to push up into it, and then we displaced lower. Now, when you displaced lower, what happened here? We went higher high and then lower low. Now, what do you look for? You know that, okay, we had a breaker, and the run higher high was into a higher time frame PD array, and then we displaced away lower. Look at the rejection followed by the displacement, these two big candles after it, and this candle as well. Your mind should automatically shift to this is a very probable high of the week, and the move here should entice you to look for short opportunities because it's all about a narrative. A rejection of a weekly level early on in the week with a news event coupled by an hourly market structure shift, right? That shows, the midweek reversal. When I hunt a midweek reversal, I like to find the displacement and the market structure shift on the 1 hour. The 15 minute is too low of a time frame to confirm a midweek reversal. Take a note of this. Midweek reversals, I want to see an hour. The hourly chart, I want to see the displacement and the market structure shift from the hourly time frame. But your intraday, like your sweeps on your previous day's high and whatnot, your market structure shifts on your intraday, 15 and 5 minute is fine to use that. But when you're looking at it on a midweek reversal, not a midday reversal, elect to use the hourly time frame. It's a lot more reliable, right? Now, going off the Euro USD, we can see that we moved up into the premium array, and this is the second bar of the 3 bar swing high formation. Let's see if you want to move back down. We have now this candle's high to this candle's low. We can see the move back down into this candle. I'm expecting the next candle to print lower, and trade inside of this candle's range. Likewise for the DXY to move higher into this candle's range. Now, if you look at the US 10-year, notice how right, you didn't run the high to go lower. This is a buy side liquidity pool, in my opinion, that's been engineered into the marketplace. Now, a run on the US 10-year higher is most likely to offset the run on DXY to these highs and the euro to start targeting these lows, right? Now, let's go and look at the COT data and bear in mind the FOMC news events that we have. If I show you, right, on Wednesday, we have one second. We have the FOMC, the meeting minutes. Now, this isn't the fund rate. This is where they just discuss, right? But the discussion creates sentiment towards the next meeting where they could potentially increase the rate again. And that sentiment is going to be relayed into which market? The interest rate market, which is the yield market, the bond yield market, right? Now, if we couple that with the COT data, right? So first, I want to discuss this, right? So if you want to get onto here, go onto futures and go onto the US dollar index. This is the COT for the DXY. Now, if I remove this one, you can see that it was net short, but you can see the position is becoming net long again, right? You see how, you know, the red line was going down and now it's starting to make its way back up, right? Now let's couple that with the idea, if you go on currencies, common law traders, go to Euro FX. From last week, from the last week, we had this movement sideways. Now you can see that there's been an increase in the net short position, right? We moved downwards here, showing there's been an addition in net shorts. Now, let's add the entire context into play. We were running up into a premium market and we're already net short. We tagged off of a weekly PD array, a premium PD array, and we displaced lower. And there has been an addition in the net shorts. There's FOMC, uh, the minutes meeting coming out, the discussion of what they want to do with the monetary policy. And the US 10-year is looking, that is strong, which will offset a stronger DXY, and then, everything cross to the dollar to be weaker. And this specific week, there has been an addition in short positions on euro dollar. And this is how you start to frame a narrative. And this is how I start to frame what I go into the market and look for. This, to me, the most probable thing in the market to see is it is more likely to trade lower for euro dollar over trading higher. That is the main goal for you as a trader to sieve out. Is the market likely to trade lower or higher? If you cannot depict that simple thing, what I say is simple. It's simple after you know everything that I've taught you, the idea of where you are in the PDRA matrix, the overall narrative, and now we have the COT data. This helps you dictate, is the market likely to move higher or lower? Now, I'm preparing another lesson for you guys to open high, low, close. That should help solidify your entire understanding of what I'm teaching you essentially. When you depict if it's, so I'm here saying it's more likely for the euro dollar to trade lower over higher, then what would I go and look for? Only short positions. Intraday, I would only look for shorts, right? Another thing I want to touch on is if we go to Monday, right? Now, on Monday, there is plenty of red news, right? So on 8:15 and 8:30 for euro. Now, let's understand it. At 8:15, there is an injection of volatility, and in 8:30, again, there is another injection of volatility. When you have these news events, and it's specifically for the euro because there's a few countries in the eurozone that depict the currency for the euro. You have Germany, France, the other eurozone countries as well. This is likely to create a significant whipsaw in the market, a significant move. Now, it's probably going to run a very wicky candle because at 8:15 you have that injection, and in 8:30 again you have that injection. You avoid this. This is what I don't like. What don't I like? Let me be more specific. When you have multiple high impact economic drivers in one session, avoid it. The reason is this, and this is going to answer the questions of the news events. The news events, they are tradable given the price before them. If it is in a tight range, do not trade it. Essentially, what you're hunting is a power of three: accumulation, manipulation, and distribution. Now, depending on what phase of accumulation, manipulation, and distribution the market is in prior to the news event, tells you if it's tradable. For example, if the manipulation, right, is occurring before the news event, and you're clearly, swept a weekly level and now you're displacing away lower, what is the news event likely to be? The phase of distribution. But the problem lies when the market is in a range, i.e., it's in the accumulation phase prior to the news event. Stay away from it then, regardless of the news event. If it was FOMC, NFP, PMI, CPI, PPI, GDP, if it is range bound before the news event, stay away from it. However, if it is clear, clearly, if you can depict that it's more likely to trade one way over the other way, trade. This is you know, your criteria for when you are trying to trade. Can I tell right now if there is a greater willingness to trade higher or lower? If you cannot depict it, and Why do I say if it's a range to stay out? Because when it's consolidating, do you have a tendency to know whether it's going to trade higher or lower? No, it's range bound. You need the manipulation to occur to know whether it's likely to trade higher or lower. You need to know where you are in the manipulation or the distribution phase of the power of three, right? Now, when there's multiple news events, there is multiple reasons for manipulation. There's going to be, when you see these news events, your mind should shift to this. At this time of this day, Monday, 8:30 a.m. New York time on the Euro USD, there's going to be a swing point. There's going to be a large injection of volatility in the marketplace. Now, when it's just one folder, right? Let's say it's one folder. It's very easy to know what that folder is probably likely to be, a draw on sell side or buy side liquidity, given what the news event was. So let's assume here there was only one folder for the euro, and before that you swept the previous day's low, and now you're starting to reject and you offer a 5 minute market structure shift, and there's 5 minutes till the news event. What's likely to occur? That news event to just carry on the market structure shift. Because there's one news event is very predictable. Now, when there's multiple in one go, the predictability shortens because there is now another reason to create another swing point in the market. That is when I stay away. When there's multiple news events, it's better to let this pass, right? Let this Monday pass. This is not a playground that you want to play in. The older kids are out to play. You don't want to dabble in a time like this, right? In this half an hour, retail will be destroyed. You don't want to be a part of that. Remember, the less economic drivers, the more predictable price is. Remember that, right? Going back to the DXY. Now, inside of this monthly redelivery rebalance, we understand that we're consolidating because we're going back and forth. Now, I want to give your attention to this, and this is something I gave your attention to on the Snapchat story that we have. This is Wednesday. Now, what do you notice, right? You notice that this candle is inside of this candle's range, right? You see how if you compare the size of this candle to this candle, this is like double the size of this candle. And we are inside the high to the low of this daily candle. Essentially, every single candle that prints, you want to see it break the previous candle's high or the low, given the context, right? So if you're bullish, you want to see the next candle to break the previous candle's high and keep the previous candle's low intact. This is open, high, low, close, by the way. Now, when it doesn't, and you're just inside the previous candle's range, that's consolidation. That is the easiest way to understand you are in a consolidative period, right? If then this candle that is currently printing is inside of the previous candle's range from high to low, you're consolidating. Now, when it's the daily candle, is a bit more fruitful. On Thursday, let's go to Thursday. We had these folders on Thursday, right? Wednesday, and we had the elections, by the way. The Republicans, I believe they took power over the House, right? Now, on Wednesday, you're consolidating. What does that entail you for the next day? If this day, Wednesday, was consolidating inside of Tuesday's range, Thursday is going to be a large range day. Thursday is going to have a large move given that the previous day was consolidating, right? That's for the daily candles. When you see the daily candle trading inside the previous one, expect the next candle to be a significant move higher. And you can see that this candle did have quite a move higher, came back close, and Friday is carrying on the move, right? Now, just for your guys' attention, this area I want to see traded to. If you just look at it, you can see that you can see the problem that arises from the area. You have many gaps, right, and you have many down close candles all one by one, right? I want to see a move and a rebalance of this range at least. Ultimately, I want to see displacement above, right? I want to see the displacement above and create, somewhat of a market maker buy model. And I want to target these two candles first and then work my way up the range, similar to the US 10-year, right? Market structure shift with displacement above this high and into this order block. Perhaps we can offer a retracement off that to then finally another leg up to attack this buy side liquidity pool and work our way up to here, right? I get asked to touch onto the crypto market right now and look at the size of, the candles. This is not a market to trade. I know some of you trade crypto futures and Bitcoin and Ethereum specifically. Avoid this market. The range is so tight. Now, when the range is tight, what does that mean? The reversal from the high to the low is very quick. When you have a large range, like from here to here, yeah, you can move up in and out of the range from premium to discount, like how I taught you guys for, this entire DXY range. But what do, right? How long are you holding trades for from the low to the high in this type of small range? Maybe one candle takes you to the top and the next one goes against you. You don't want to trade in that. Remember, if you cannot depict a bias, and when I mean bias, I mean the next candles to trade higher or lower, sit out of the market. This is something that you want to avoid in the marketplace, right? So that's it for this weekly commentary. Now, just to reiterate the points that we made, I'm expecting a bullish candle for the DXY weekly, right? Likewise, for Euro USD, bearish candle. For the indices, avoid that market. I'm not going to touch on that market. It's indecisive for me right now. And I expect upwards move on the bond market as well. Now, I want you guys to start using the COT data a bit more. Uh, Play around with it. You can find on the futures, the DXY. You can find the Bitcoin COT data. Specifically, look at the DXY and look at euro dollar for forex. Now you can look at pound as well, but I'm avoiding looking at pound right now. The reason being is if we go to the daily chart, the daily candles are, if you compare the last three daily candles to the rest of these big candles, it's just consolidating a lot more than euro, and it's something that I want to avoid. Like this was a few days of price action in this, and I'd rather avoid that than trade that. Euro, in my opinion, is the more clean one to trade. So that's it for this weekly commentary. Any questions, like always, ask me. Pay attention to what I said about the news in this weekly commentary, right? Until next time, and I'll catch you guys in the next one.